Okay, YouTube, I hope you are well. Right, let's get into it, yeah. So, what are we trying to do here? We're just looking for our opportunities for today, right? So we want to know, where are the places that give us the highest value? What does that value look like? And so look, as a quick recap, markets have been relatively bearish, at least since this was taken by this change of character. So you can see, over a period of time, if we go to maybe the 2 hour, it becomes a little bit clearer. What I've done is I've represented market structure based upon, these areas here. So look, we go higher low, lower low, higher low, lower high. Let me just start that again. I always stuff this up, right? Higher high, lower low, lower high, lower low, lower high, lower low. But then what happens? We change that character there by breaking through, thus creating bullish market structure, right? And then of course, what we always expect is that we now start changing to bullish momentum. And so we have a higher high, a higher low, a higher high. Didn't last too long, right? And then we broke, creating a change of character down into a new lower low. So let's just zoom into this section here and see what's going on. Okay, so to bring us into the present day, let's just zoom into this zone here. So right now, once we broke this market structure to create a new breaker structure, of course we came whipping straight back in, right? You can see price come back in. Now, what are we waiting to see? This becomes a strong low, right? Because what do we expect? We don't expect this to break, but we're not, this could be just a liquidity move to clear out the stops and stuff and the high leverage traders here. But of course, it didn't. It held, and then we got a breaker structure, which is great because now we understand that from a market structure bias that markets are now bullish and flipping bullish, and so we should now flip our strong and weak lows into weak lows into strong lows, and strong highs into weak highs. What do we always expect? We always expect the weakness to break. Our job as analysts is to find out where that pullback is going to come to so that we can capitalize on a nice risk to reward move. And so here's the plan. You can see here, if I just get rid of that, we're looking for inefficiencies in the market, right? What are inefficiencies? Inefficiencies are where we have an overwhelming disproportion between buyers and sellers, right? So usually what that tends to mean is, if you think logically and break it down, is the markets are always trying to give fair value or fair opportunity to every single trader to get in at a price that they want to trade at. And so when you see this move to the upside here, you can clearly see the market hasn't given some of them traders an opportunity, because when you get so much momentum into a move, that will often leave a lot of traders behind. And so we call that an unfair area, right, or an imbalance. And so what our job is to do is to understand where them imbalances occur, so that we know when markets come down to give them traders an opportunity, we can capitalize on it. Now, does it mean simply because this area here did not give an opportunity that price should respect that and move to the upside? Absolutely not. But what our job is to understand is general directional bias. Where is the strength? We only really want to trade from a position of strength, right, not weakness. And so we know the further down we get to the strong low, the more favorable the strength is from our side, and the confidence in the move that position can be respected. And so we see two options, we see two ideas, right? You see this idea here first, and our job as traders isn't to try and guess. We just have an opportunity at both, and so we need to take both opportunities. If that opportunity fails, that's just a loss, right? It's an acceptable loss. It's something that we appreciate and accept as traders, that not every single trade is going to be a winner. But what we're doing is we're piling up ideas on our side, so that over a longer period of time, these risks to rewards are going to be more favorable in the long run, right? So it's okay on a 20-to-1 risk to reward that if that loses, it's okay. If this turns into a successful trade, however, that's 20 lots or positions, or however you know, 20 risk to rewards. If I'm risking $100 here, well, that would be a $2,000 trade, right? If I'm risking $100 here, then that's a 10-to-1 risk to reward, right? It's all dependent upon your ability as a trader to recognize, don't get too emotional, and just go with the flow, right? Go with the current. And so we expect that there's going to be a pullback. This is currently what we're seeing here, this move down. But what we do anticipate is a move to break what? The week high and continue to the upside, right? So inefficiencies then, understanding inefficiencies. How do we understand these things? So obviously price is going to try to come into this zone, right? But when it comes into this zone, we only really want to use this area here, which is the first candle with the with that tail or wick, as our zone of entry. And so really I'm just looking for mapping this entry with a little tiny move just below that to be able to get into that move to obviously turn back bullish again. If that doesn't hold, then I have my second position at the next inefficiency, which I will have as here. And so you may say, well, why don't you extend this all the way down here? Well, realistically, if it goes as far as that, then there's a potential that the market may reverse anyway and then break that strong low, and then we flip bearish again, and then we flip between our strong low becomes a weak low and our strong high becomes our weak high becomes a strong low and a strong high, sorry. And so look at this. This is now just understanding we are in an internal position here, right? So as well as us having our weak let me make these a little bit more clear, right? We'll denote the swing range in a solid line, and we'll denote the internal range as a dotted line. Now, for us, we are only interested in creating new internal structure, right, to understand the direction of the internal move. And so right now we've broken this weak low, but we can't place this down here yet until this closes, because wicks, we don't really want to get too messy with wicks, because wicks are nothing more than liquidity squeezes, right, where there's a move to, or a push for liquidity to try and get almost like a sell to buy, so grab a load of liquidity for that move up. But we know we've got this inefficiency, so we're just going to continue to watch the markets and see how we react. Now, is this a limit order? Or are we just waiting in this zone? We're just waiting in this zone. Once price comes down to here, we're going to go into that 15-minute, okay? When we get into the 15-minute, what are we waiting for? We're waiting for a change of character, right? We're waiting for this kind of idea that price is going to do this. So we come down, we go up, we come down, say to here. And then what are we waiting for? We're waiting for a change of character, right? On the lower time frames, we're going to have different internal structure. This is internal structure on a 2-hour, but on the 15-minute, it's different, right? We don't have that same structure on the 2-hour. Once we break this structure here, where is the new internal low? New internal weak strong high will be here, and the new low will be wherever the low of this move comes to before we break. And so really, once we break our internal strong high, that will be a change of character per se. And then what we're waiting for is effectively a little pushback. Let me just tidy this up a little second. We're waiting for a pullback into the zone to then accept our trade. And that's, again, we'll assume at this stage that once we come into this zone, there will be some form of inefficiency from the push to the upside. So when price comes back up here, what are we looking for? Well, we're looking for that inefficiency. That's supposed to be a candle, by the way. And the inefficiency is going to be somewhere here, and we're going to target this candle here for our entry to the upside. And that's it. We keep it simple. We don't have to be complex. It doesn't. It needs to. In fact, it needs to be as non-complex as possible. And moreover, it needs to be mechanical, right? We don't want to have a guessing game where things are not clear. It has to be mechanically driven. Very, very little discretion, because the more discretion you have, the more emotion you have, and so we want to take emotions out of this entirely. Okay, and so let's just see what happens. You know, again, this didn't break, did it? So you can tell it's a strong area. It's an internal, but you know, this is the strong internal right now. Until we break, it's not actually the strong internal. That is the strong internal. This is our range. Whenever we break that or break that is where we change our structure. So nice quick one for you today. This can also be applied on any altcoin as well. Obviously, once we know the directional bias of Bitcoin, gives us more confidence in what's going to happen with altcoins as well. So that's just good savvy TA, being able to utilize the direction of Bitcoin to focus and draw in on what's going on with our altcoins. So let me know if you guys like these lives. I might dip on a bit later on just to see how this plays out. But yeah, if they are of use to you, just drop a comment in and I'll do these more often. Okie, speak to you guys soon. By the way, Discord link is in the description. If you guys want to come in and say hi.